So if we're looking for diversification, we need an asset that has greater than zero return, right? And we need low correlation. So clearly, crypto qualifies for both. We've had a wonderful run in terms of price, and we have 4-year correlations that are essentially zero. All right, guys. So at SEBA Bank, we think we believe crypto is an asset class, right? It's a legitimate asset class, and by the wave of interest that we're seeing moving into the market, we can tell that everybody who has to do with money is looking at the crypto space. Okay, and now all of us here have to do with money, investing money, allocating money, managing money, and a large part of that is diversification, right? So diversification is at once kind of boring, but at the same time, it's really, really important, right? It's at the essence of what we do as money manager, and I think it's attributed to Markowitz, who said diversification is the only free lunch in finance. So we see that from a lot of our clients. We're predominantly a B2B company, right? We talk to family offices, asset managers, banks, and they're moving into crypto. They're looking at crypto for the return potential, but increasingly for the diversification potential. So let's look at some numbers here, right? On your left side, let's just focus on Bitcoin versus, let's equity, right? So if you look at Bitcoin equity, that correlation, of course, varies over time, just like it does on the traditional side. It varies, but it's low, right? So that's good news, right? So if you look at the last 4 years, Bitcoin as a proxy for crypto, Bitcoin versus equity, the correlation was somewhere between plus 0.2 and minus 0.2, so it's essentially zero, right? If we look at Bitcoin versus fixed income, it's a little bit higher, but still low. It's around between 0.5 plus and minus 0.2. So again, over the last 4 years, we can see correlation between crypto and traditional. It varies, it bumps up and down, but essentially it's almost zero, right? And we can see that on the right side, the colorful graph. We take the 4 years that we're looking at on the left side. We take the 4 years and basically aggregate it out. And let's, if you look at Bitcoin versus equity, Bitcoin versus fixed income, that actually comes out at the very same number, 0.09. So basically zero, right? So if we're looking for diversification, we need an asset that has greater than zero return, right? And we need low correlation. So clearly, crypto qualifies for both. We've had a wonderful run in terms of price, and we have 4-year correlations that are essentially zero, right? So what do we do with this now? What we've been helping our clients do is allocate a small allocation to crypto in their overall traditional asset allocation, right? Now, let's look at this graph here. That's basically going back 4 years and putting 4% of a traditional portfolio into Bitcoin. So 4%, right? And the traditional portfolio is equity and fixed income and maybe 20% alternatives. So the 4% increases your efficiency by 50%. That's huge. We all know that's huge, right? So if you had invested 4% Bitcoin within the framework of whatever portfolio you're managing, chances are your Sharpe ratio is up 50%, right? So that's a massive, massive benefit with a very small allocation. Single-digit allocation, 4%, and it drives your efficiency up 50%. So what could be better than this? Well, I'll tell you, this can be better. So instead of just, taking Bitcoin or any other single coin, of course, what you want to do is you want to allocate into a smartly managed beta product on crypto, right? And a lot of our clients actually did that. We've been managing our own crypto index for the last 2 years, which is, of course, investable. And the clients, we've helped a lot of clients do exactly that. So taking the same 4% instead of Bitcoin, putting them into the SEBA index, has actually doubled the Sharpe ratio. So again, we're talking about a 4% allocation of a traditional portfolio, and this 4% allocation doubles the efficiency of your portfolio. So it doubles the risk-return relationship of your portfolio. And that's a wonderful, wonderful attribute. And of course, you know, up 100% is much better than up 50%, right? So I want to conclude with looking at or giving you a bit of flavor in terms of how we do it, right? And I think it's worth noting that the crypto space has attracted a lot of interest, right? I mean, you're testament of this. You're here. You're looking at this. You're here to listen to my colleagues. There's a lot of money starting to pour into this space, and there's a lot of new actors, right? Now, we've been around for 3 years, and we've been managing crypto portfolios for 2 years. So what we can show and what we've helped with our clients in terms of portfolio allocation is actually a track record. It's a live track record with real clients, with real money. So that's a real nice differentiation that we have, right? So what we do on the SEBA index and what we have been doing for the last 2 years is a bottom-up approach in terms of how we select coins. So we look at the protocol, we look at the tokenomics, we look at the governance, and we have a dedicated team who does that, right? It's a full-time job. You have to do the homework, right? And then we combine that with a top-down methodology in terms of, you know, risk parity, safety in terms of the exchanges, liquidity in terms of the trading, and so on. And the combination of the bottom-up and the top-down has really given us a lot of pride in terms of the performance, right? So over the last 2 years, the SEBA index has delivered twice the performance of Bitcoin at the same volatility. And that brings me back to the Sharpe ratio, right? So adding 4% Bitcoin to a portfolio will increase the Sharpe ratio by 50%. And adding our index will double it, right? Because we, at the same level of risk, we've managed to actually extract double the performance of Bitcoin. So I'd like to leave you with this, and my message is twofold. One, a small single-digit crypto allocation is suitable for most investors. And two, don't do it in a single coin. Do it in a smart beta product, ideally with someone who's got a track record. Thank you.